Hey, good morning, everyone, or good afternoon. It's 12:30 right here in the East Coast. Welcome to the TradeStation Masterclass. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities. And today we are going to do our Strategy Elements class, highlighting the Walk Forward Optimizer. We have been talking about optimization for the past few weeks, starting with optimization that you can do on the platform, like the simple optimization. We kind of talked a little bit about in sample and out of sample data, but starting with last week, we started talking about the walk forward optimizer, which is a more advanced optimization tool that you find on the TradeStation platform. Today is part two of that class because last week we just concentrated on how to set up the walk forward optimizer, how to load it, and how to get it started. Now let's go ahead and spend some time, looking at the walk forward optimizer report and some of the interesting things that it can provide us, especially if you're developing a strategy and if you're using optimization in the process. Before we get started, let's go through some of the disclosures. Keep in mind that every symbol and idea that I talk about is for educational purposes only. It is not a recommendation of TradeStation. Also, that active trading is not suitable for everyone. It should only be done with risk capital. And past historical performance is no guarantee of future results. For additional information on these disclosures, please visit the link right there on the PowerPoint slide, www.tradestation.com/important dash information. All right, guys, let's go over here to my TradeStation platform. Just as a little bit of review from what we learned last week, I do have a workspace that is already set up for the walk forward. So let's go ahead and pull that up. I think I can go here into recent workspaces, and here it is. It's a WFO test master. I think that last time we were talking about the walk forward optimizer, I shared a custom strategy with the class. Does anybody here not have this custom strategy? Because this is the one that I'm going to be using today. I'm not going to be looking into the strategy or the code or how it's written, but this is a strategy that we're going to be using in the walk forward optimizer because it was specifically designed to provide good results in the walk forward optimizer. I'm not sure, if that already breaks the system. If you design a strategy so that it passes with flying colors inside of the walk forward optimizer, I would, second guess what the strategy is doing. Although last time we did say that the strategy seems to be looking at Keltner channel to generate entries and exits, and then it's exiting with some trailing stops. So it's an interesting strategy. If anybody likes the idea, I mean, you can continue, drilling down and looking at the insights of this strategy, but that's what we're going to be using today. Okay, is the chat working? First of all, I know that last week we had issues with the chat, and I just want to make sure that it's back on. So if anybody can just say hi or yes. Okay, perfect. Okay, Rich, thank you so much. So it is working perfect. So everybody has the custom strategy, which is also good. Let's go ahead, and we all know that in order for us to run the walk forward optimizer, and this is, as I said, just a quick review. Once you set up the optimization values, I'm just going to do one as an example, and you click OK. The type of optimization is important so that you set it to walk forward. That's the way that you first have to generate some testing data that the walk forward optimizer can use by coming here and setting the type to walk forward and giving your file a custom name. The other settings don't really matter, but this is the most important one to be able to use data in the walk forward optimizer. We did that already, last time while we were doing the walk forward optimization, or what the walk forward optimizer calls the cluster analysis. I kind of had to stop it in the middle because we weren't going to wait for the whole test to run. However, I did run it completely. So let me get out of this. All right. So I cannot click on, okay, let's optimize then. Okay, okay, there we go. It optimized, but you don't have to do that, you know? I was just showing you that you have to set it up inside of the strategy before even launching the walk forward. What I'm gonna do now is go to the walk forward optimizer, because in here, and I can maximize this, okay, yes. In here, inside of the walk forward optimizer, first of all, we had to go to the file menu and open the walk forward test. I already did it. I'm gonna load a cluster analysis in a little moment because that's a completed cluster analysis. What we did, once you save the optimization data into the file that I just showed you, you have to come in here and click on File, Open Walk Forward Test. You'll see all the custom names that you've created. The most recent ones, most of the time appear, well, that's not the most recent ones. This is sorted in alphabetical order. So just look for the name of the file you created. In our case, the one that we created was Keltner Genetic. By the way, the name that you provide, it's kind of added to the symbol and the interval, which is the beginning part of the file. I wish the name that you provide would be the beginning so that you would know how it's sorted, right? But this is SPY. We did a test on a 60-minute chart, and it's a Keltner genetic because we ran a genetic optimization. I'm not sure if you remember last time, but we had generated, after we plugged in all our values for the inputs or the tests that we wanted, or the input parameters that we wanted to optimize, we wound up with, I think it was over 300,000 different tests. So what we did in class is we switched it to genetic so that it would run the tests a little bit faster. And instead of running every single iteration or every single combination of input parameters, it would do more of a sampling of the data using the concepts of genetic optimization, where you have populations and generations, and you have a mutation rate, and you have a crossover rate. So it applies the genetic algorithms to our optimization, and it's able to do it much faster. And I think once we used the suggested genetic optimization settings, we were able to complete it in, I think it was 2 minutes. It was pretty fast. So if we select the results here and we open them, it's loaded onto the walk forward optimizer. And all you need to do is come here to walk forward analysis and do the cluster analysis, which is the one you would want to use. You know, I know that there's a single WFA. By the way, WFA just stands for walk forward analysis. But a single WFA doesn't give you the full picture. If anyone is already opening up the walk forward optimizer to run a test, they might as well just do the cluster, because you've gone so far to use a tool and you're not seeing the potential of the tool until you do a cluster analysis. And a cluster analysis is the one that's going to split up the data, or the historical data, into multiple runs. You know, not only, but the number of multiple runs is going to vary. And that's it's a variable that changes in here in this cluster analysis. And another variable that changes is also the percentage of the data that's being reserved as an out of sample segment, which is the basis of the walk forward optimizer. It looks at out of sample performance to make sure that it matches the in sample, or that is as good as the in sample, because that's exactly what you want the optimization to accomplish. You know, you don't want to use an overly optimized strategy on in sample data, because that's curve fitting the strategy to something that's already happened. What you really want is to use parameters that you find in optimization and apply them to data that the strategy hasn't seen, to mimic and to simulate, you know, real-time trading activity. So I did the cluster analysis already. So all I need to do is I'm going to load the cluster analysis. So I'm going to come over here, select the same one that I ran this morning, the Keltner genetic, and I'm going to load it. All right, this is what it provides me. So this is the point where we stopped last week. So let's go through some of the tabs here and some of the information that is relevant to everyone. First of all, the first thing that jumps at you, you have a matrix here of passing and failing results. We did talk a little bit about what constitutes a passing grade and what constitutes a failing grade. It's all based on editable test criteria. Where do we find it? We have to go here to setup, and you find the test criteria settings. Let's go ahead and take a look at it because we kind of went a little bit fast when we talked about these last time. So it's 5 major criteria. The first one is overall profitability. Fail if total profit is less than 0. So what we're looking for is profitable runs. This is very interesting because if it runs a report, see if it finds parameters that throw a negative report, a loss, it's going to fail it immediately. Pretty cool, huh? So we want all the iterations of the report to have passed. Also, walk forward robustness. Fail if walk forward efficiency is less than 50%. This is a great number because this compares what the in sample is doing with the out of sample. It wants the out of sample, which is the section that it's going to matter the most to us, to be at least 50% as good as the in sample. So that's what the walk forward efficiency is. If anything less than 50, I don't want to even look at it, because I want robustness. And robustness means that the strategy consistently provides good results, whether it is on data that it sees or data that it doesn't see. Criterion number 3, consistency of profits. We want to fail if less than 50% of the walk forward runs were profitable. So yes, the data that we provide, the WFO, is going to be split up in segments. And of course, we're going to have different runs. It's going to fail the whole, test if 50% of the walk forward runs, if less than 50% of the walk forward runs were profitable. Number 4 is distribution of profits. This is distribution of profits among all the different runs. Fail if any given run contributed more than 50% of the total net profit. This is important. Again, we go back to the same idea that the data is being split up in chunks of or segments, and these segments have to provide you profitability, but it doesn't want any singular segment to contribute more than 50% to the total net profit. Very cool, huh? So that makes sure that you have a little bit of consistency of profits across the different runs. And lastly, number 5, fail if maximum drawdown in any single run exceeded 40% of the initial capital. Initial capital is up here. It starts off at $100,000. If any of the runs has a drawdown that exceeds 40% of that initial capital, it's also going to fail. So in order for you to have a passing grade on this matrix, you have to pass all 5 criteria. If it fails any of these criteria, the actual run is going to fail. Does that make sense? All right. So again, all these boxes can be edited. The ones that are in the boxes are, suggested. They're the default ones, but if you want to make your optimization a little bit more strict, you can do that, or less strict, you can also do that. Let me cancel out of this. Another thing that I wanted to point out is the matrix at the very top has the different runs. Remember that the runs is the number of segments that the data is divided into. In this particular, WFO, I'm not sure if you remember, we have about 11 years of data. That amount of historical data is going to be split up in what we call different runs. So the very first column here is 5 runs. So if we have about 11 years, we can imagine that each one of the runs is going to include about 2 years worth of data. Now on the opposite side, we have this last column that has 30 runs. Now we still have the same 11 years, which means that in this particular case, if we split up the data in 30 individual segments, each one of the segments is going to be about what? 4 months? If we have 30 of them, right? Yeah. I think that's about right. 3 or 4 months, each one of the segments, because it has to split up the data in that number of pieces. And here, running vertically, we have the out of sample percentages starting at 10%. So if we look at the very first column here, 5, we split up the data into 5 segments. Each segment is about 2 years. And the 10% here means that out of that 2-year period, 10% of that is going to be reserved as out of sample. And then it's going to do 15%, then 20%. So the percentages here is the amount of data that is being reserved for out of sample. And that's how the matrix is created. You can see that some of the passing grades have a double asterisk right next to it. That means that it's passing with distinction. I'm not sure if that's part here of the test criteria. Let's see. Okay, criteria 1 to 5 is only applied to out of sample runs. So that we already talked about that. Only checked criteria will be applied during the evaluation process. You can uncheck any of these to, and that's why you have check boxes. You have flexibility on what you want the report to look for. But I don't see the distinction part. Maybe that's just something that I know from reading the documentation. But anytime that you have that double asterisk next to a passing grade, it means that it passed with distinction, meaning that it was very close to being the best results. So what the cluster analysis does is that it creates an average area where the best results are. Look at, 3 of the runs passed with distinction inside of this, what we call cluster. I know that some of the runs failed, but in average, this area that is colored in green is the area that is the best average. And usually the one in the middle is the highest one, but not necessarily, because it creates an average that is always going to have a cluster identified inside of the matrix where the highest numbers are. If you want a little bit more detail as to what is in here, by the way, before we change this, let me just give you a little bit more information of what's happening. Right here at the bottom is the re-optimization schedule. Interesting. If you want to continue using this tool going forward, take a look. The schedule in sample, 1,522 days. Out of sample, 269 days. So based on the out of sample data, it's going to create a schedule of when you need to re-optimize the strategy. So the current optimization you can see here is on July 19th. That's today, the date today is the 27th. So this is using the data as of the 19th of July. But here it's telling you that come April 14th, then we should re-optimize the strategy. Why April 14th? Because 260 new days have passed, and it's just suggesting that you should optimize. Based on the percentages of out-of-sample data, this means that you already have enough data to allocate that percentage, which is interesting, And then you have the schedule going forward, up till the year 2029. It just provides you the dates of when the strategy should be re-optimized. Some of the things that you find here. Right here at the top, you have a matrix average. It has a passing grade. This is important because it may look green, but it's not until you look over here at the matrix average, which is everything, that pretty much tells you if the WFO test actually passed. You have information such as how many tests per walk forward analysis. It tells you where the center is. The center is right on the 15% out of sample percentage, which is this one. and the 10 runs. So if you look at the 10 runs and match it with the 15% out of sample, we're right here where the blue is, which is the center of our cluster. So here, the highest cluster average passes, and it tells you optimal re-optimization interval 269 days. So we should re-optimize every 269 days. These two drop downs, of course, will allow you to view the data under a different glass. The default is the walk forward overall result, which is based on the 5 criteria that we saw in the test settings. But if you come over here to this drop down, you can set it to the P&L, re-optimized P&L, which changes the matrix and it provides you what the net or the average P&L was. You can see that the center of our cluster is not the highest net profit. In fact, the highest net profit is right here. This one right here. We're split up the data into 5 runs using 10% of out of sample data. But the center of the cluster is the one that's usually selected as the best run. Of course, it provides you this data because then you can analyze and see what happens if I use the inputs of that particular run. We'll show you how you can check what are the input parameters and drill down and see more details on that particular information. But this is net profit, annualized net profit. Okay, let's go to walk forward efficiency. Walk forward efficiency, again, this is comparing in sample to out of sample. If it's the same, the in sample is the same as the out of sample, we are at 100% efficiency. If it's 50, then the out of sample is half as good. But if it's over 100, it means that the out of sample did better than the in sample. Like in this cases, we have a 244%, 111%. So some of these are the ones that passed with distinction. The center of the cluster has a 77%, meaning that the out of sample did 77% as good as the in sample, which is a good number. If you guys remember the settings of the WFO, anything that is above 50% is considered passing. We have the walk forward efficiency. We have consistency of profits. That just gives you the percentage of runs that are profitable. So these are the runs here. We have 10 runs, and the 10 runs, 70% of the runs were profitable. You can see here the ones that passed with distinction are the ones that they all passed. We have maximum drawdown. Again, the ones that have the passing grade with distinction are the ones that have the least drawdown. The middle run, the middle of the cluster, it's at 32%. Now, this is the re-optimization interval of out of sample days. Notice that 269 is the center of the cluster, and that's the one that is suggested that we should re-optimize the strategy in. But you see the other ones, you see the other schedules here. The ones that are that pass with distinction have a higher interval for the re-optimization schedule at 394 trading days, 300 trading days. But you can see those details for each one of the runs. And you can see it in days, number of days, and you can also see it as a number of bars. How many bars does it need for the optimization to be suggested? And these two at the very end, it just gives you how many days were in the in sample and how many bars were in the in sample section of the data. So this is number of days. If you look at the smaller the percentage of out of sample, the higher the number of days are in the in sample. And that's pretty much obvious, right? If you only reserve this very small amount for the out of sample, it means you have more for the in sample, and we see that very clearly in this graph, okay? But for the most part, we want to take a look at the overall result, because that's what's based, those results is what's based on the test criteria that we select. And here we have, the type of walk forward analysis that is being done. Usually, the one that is default is the one that is looked at, and it's going to give you a good indication of what the strategy is doing and how robust it is. But here we have another one with bar-based out of sample. I checked all these right here, and they all failed. Every single one. You can see how the cluster is all in red. I'm not sure how to interpret that. Maybe it's because the fact that the strategy was designed for this particular test and it failed in other areas. This raises a lot of red flags on this particular strategy. So I would have to drill down and see, why is it failing when I change the type of walk forward analysis? But on the percentage based on out of sample, it passes with flying colors. Okay. So let's take a look at the different tabs here and see what type of information we get. Optimization summary. In sample, notice that it says in parentheses, in sample. Do we care about what the in sample is doing? Well, maybe, just for curiosity. But are we going to base decisions on what happens in sample? No. The whole reason why we're doing the WFO is because we want to focus on the out of sample areas, because that's the data that the strategy hasn't seen. But here we have a tab that gives you performance metrics on the in sample, which is interesting. So here we have the in sample periods. Remember, this is based on, let me go back here to the cluster analysis. This is based on this one, which has 10 runs, right? 10 runs. So when you go to the optimization summary in sample, these are the 10 runs that it sees. 10 runs. You can see the variation in the inputs. The inputs are going to change from run to run. Remember that it's going to optimize an in sample, find optimal parameters in sample, and apply those to the out of sample. I mean, some of the input parameters are not going to change. Some of them will, but you can see the input parameter combination that was tested and the period of time. You can see that the first run is from 2011 to 2015. We talked about segments of data. We know that the full historical data is from 2011 to 2022. But since we're running 10 different runs, it has to segment that data. And this is what it's telling you, okay, from this date to this date, you have a certain number of days, a certain number of bars, the net profit that was generated, again, in sample, the drawdown for the in sample, and all the different metrics for the in sample. But as I said before, this is okay because we're looking at the data and it's easy to find optimal entries and exits. What we need to do is look at the out of sample. But here's a calculation, at least, it provides you the recommended, optimization schedule. It also gives you the post optimization risk, which is just taking the drawdown and multiplying it by a factor of 1.5. It doesn't want the drawdown to be excessive, and that is a calculation that is important when you're looking at the strategy itself. Let's take a look at the second tab because it's the same thing. This is the optimization summary for the in sample, and this is the walk forward summary for the out of sample. The two tabs are going to be very similar, but this third tab is, of course, as the parentheses say, out of sample. And you can see the specific dates that are included in the out of sample. Like on the first run, we included data from March 17th all the way to December 9th. So we had 267 days in that out of sample, and we can see the profits right here. You can see that some runs are negative. But if you remember the test criteria, it says that as long as 50% of the runs are profitable, it passes. And we see that clearly here. We can see that out of all the 10 runs, only 3 fail. So we have 70% of profitability. I think we saw 70% somewhere talking about efficiency, right? And we have the drawdown numbers. This is all based on data that the strategy hasn't seen. In fact, it reinforces the walk forward efficiency. So this is doing 70% as good, 77%, almost 80% as good as the in sample. Pretty cool, huh? Let me take a look at, yeah, you can see the annualized P&L because that's a good measure to see how the strategy did. Look at the annualized P&L is about 15,000. And when you go to the out of sample, the annualized P&L here is about 12,000. So yes, close to 80% as good. Okay. What else do we see here? Let's go to the next tab here, test results. Test results for that particular cluster center. It passes all of them. If you want to see a different, grading for a different run, just click on it, go back to the cluster analysis, and let's see, this one failed, right? We click on this failed one, and we go back to the test results, and we can see which one did it fail. It failed the distribution of profits. Walk forward run number 15 contributed more than 50% towards the complete run. So it's interesting that you can always go back to the cluster analysis, click on one that you want to drill down on, and you see all the details of that particular run. I'm going to click back on the one that we were looking at. Test results, you can see that it passes everything. Let's take a look at one that passes with distinction, like this one right here, the very first one. If we go to test results, here we have the double asterisk. It says walk forward efficiency greater than or equal to 100%. System is likely to perform in future at a rate similar to those achieved during optimization. It doesn't say distinction either, but yeah, distinction is something that I pulled up from the documentation. Everybody here can go to the documentation by going to help, contents, and index. All right, let's go back here to the center of our cluster. Let's go back to test results, and let's move over to our graphs. Graphs are cool too, because here you see, well, this is the walk forward equity. This is the equity on your equity curve line. So some of the information that you find here inside of the WFO is going to be very similar to the information that you find inside of the strategy performance report. This is our equity curve line based on our trade numbers down here. You can click on the little directional arrows to go back in history and see the beginning of this strategy. This is the number of trades. At the very beginning of the strategy trade, we can see that we dipped down into the negative. This is a negative number. This is where 0 is. But you can see that it hasn't been all pretty throughout the history of the historical backtest. Now, the nice thing about this is that you have a checkbox over here at the very top that says show OOS intervals. This is out of sample intervals. If I put a check there, I'm going to see where the data. There we go. So remember that the out of sample results are the ones that are compiled together to show you how the strategy would have performed by not looking at the data. And as I go through the whole historical backtest, you can see these vertical green lines that tell you when when it moves from one run to the next, when it's compiling out of sample results from one run to another. So these are the interval and how the data is split up. And you can see all those vertical lines throughout history. In this particular case, we should have 10 segments of data, since this is just using 10 runs. All right. This is trade number. You can also do the trade date, and you see the dates at the bottom. And here on the far right, we have a checkbox to show the closing price of the backtest. This is, I think we ran this on Spider. Yes, this is Spiders. And you can see what the closing price is of Spider and how that affected your equity curve line. Interesting. P&L history. This is like the trade list tab of the strategy performance report. From the very beginning, it tells you what the first trade is, in the year 2011. Okay, well, it tells you when the trade was exited. It doesn't tell you when the trade was entered. It exited at 10:30. The position was long, was for 500, and we made about $205 on that first trade. We made $205, but it drew down 285. Interesting fact, because drawdown is really important. How much money did you make compared to how much money did you risk? You know, for example, here's a huge trade that won $1,100 and didn't draw down anything. So there's no risk in that trade. I mean, there was risk, of course, but it didn't go to the negative at all. But sometimes you may have a winning trade of $90, like this one, trade number 15. It only captured $90, but it drew down 265. So there was a greater risk on this trade. You risked, losing $265. In this case, you only made 90. So this is a trade list. Not much you can do here, but it does give you a history of all the different trades. There was 1,120 trades on the historical backtest. Performance summary, similar to the strategy performance report, gives you a little bit more flexibility because you can specify a date range. This is the full range of data. Although here it doesn't include the most recent data, but I can increase that if I want to, I think. There we go. I can just enter it, and you can see that it changes the numbers on your report. Okay, then you can select all trades, long trades, or short trades to see all the difference. Okay, so this is pretty much self-explanatory. I'm just showing or walking you through the different screens and how you can edit some of the information here. The equity preview, again, going back to the equity curve. This is also an interesting way of looking at the different runs. There's a checkbox here that allows me to see more of the runs. If you guys remember, this is ranking all the different optimization results. Yep, that's what it's doing. So this is ranking all the 2,931 different results and ranking them based on, what is it? Rank based on test number. If we want to rank them based on net profit in ascending order, let's do descending order. So we see the one at the very top. I'm going to say apply ranking. Okay, and this is the one that has the most net profit. This is test number 1525. It gives you the combination of inputs. And it does give you a little bit more detail as to what's happening inside of the strategy. By the way, this combination of inputs is not the one that was selected as the most robust. If you remember, the numbers are different, but this is giving you everything else. I mean, there was a combination of parameters that provided a net profit of $218,000. Of course, it was not robust because it didn't maintain that consistency. All right, so play around with this information. I'm sure you guys will enjoy. If anybody wants to use a WFO, it's a great tool to drill down and look at all the data and see how you can manage it. Distribution analysis, I find that is a very interesting report. This is, let's just start with the one that's here by default. It's here's showing you the average profit distribution per number of bars in the markets for all trades. So you can see that the graph says number of bars. So you can see the trades or how the distribution or how the profits were distributed in how long you kept that trade. So for trades that were 100 to 200 bars in the market, that's where the most distribution or the most profits were made. The shorter the trades, here we have trades that were, from 1 to 5 bars, we have just a loss. There's no profits assigned to that bucket. So the longer you kept yourself in the trade, it seems like for this strategy, the more profits you made. But it's interesting that you can do anything here. So let's say average percent profitable distribution. Well, that's kind of the same as the profit distribution. But let's see. One thing that I found interesting is going back to profit distribution per not number of bars in the market, but entry date stamp. And you can see that if you entered on Wednesdays, you were not as profitable as the trades that entered on Friday. So this is distributing the profits per day or time. It seems like if you enter the trade in the afternoon, those were the ones that made more profits. I mean, it's just statistical measure, statistical data on the strategy run, and I just found the data interesting. Does it make sense to have maybe a time condition in the strategies that says, hey, wait until 2 p.m. to trade? I don't know, maybe, but this is just the interesting data. All right, so, and this is for all trades, and you can do all sorts of graphs here. Now, Monte Carlo, I'm not really knowledgeable in Monte Carlo, other than you can just, run the Monte Carlo simulation, and it provides you the data here. It's a special type of graphing and data mining statistics that you can use, Monte Carlo. I don't have really much to say about it, but other than it's included here if you want to take a look. And lastly, the input ranges, going back to the input ranges that are being tested. We saw those inside of the platform, but it's nice that you can come back here on this last tab and check what are the ranges that you tested, because maybe you would want to test a larger range, and this tells you what's included in this test. All right. So going back here to the cluster analysis and the out of sample, you can see the input parameters that were selected: 13.1, 13.1, 21.2, 13, 2, 2, 2, 2, 2. If you back to the input ranges, you can see all the different inputs that were tested and the ones that were selected. It's interesting that the number of ATRs and the floor amount, the 2, 2, 2, 2, 2, seems to have selected, the starting number on the range. We tested from 2 to 4, 2 to 6, 2 to 10, 2 to 6, and 2 to 10. But when we look at the out of sample, it seems like it's selected 2s across the board for those last 5 inputs. Just an interesting fact. And notice, I want to highlight also that these input parameters are not the same as the ones you find over here. When we went to the equity preview and we ranked the tests by net profit, these are the ones that were most profitable: 8.1, 13.1, 21, 2, 13. Okay, and you can see the variation at the end: 2, 4, 2, 2. All right, that's the information that I had for you guys. I know it's there's a lot of information, but I needed to go through each one of these tabs and show you how you can use them and how you can interpret them. So hopefully you got good information here. And if you didn't, I recommend that you go to the help, go to contents and index. Let me bring this page over. This gives you information, a ton of information about the WFO. If you go here to contents, not to contents, if you go here to about the walk forward optimization, you get a drill down on each one of the tabs that are included. So if you want to get a little bit more understanding on, let's say, the walk forward out of sample, click there, and it provides you, information about what pieces of information to look at. I know that the WFO makes a selection of the center of the cluster, but here's a link on this particular page that says, how do I select the best or the most robust strategy when using the walk forward optimizer? If you click here, it of course takes you to the FAQs, which I also find a lot of great information in here. Okay, guys, thank you so much for joining me today. Hope to see everyone tomorrow. Tomorrow, I had said that we had John Brook tomorrow, but we don't. We have our own class. We're going to talk about easy language, and I think it's about functions. I'm not really sure, but we'll see the topic tomorrow. I'll send out a message so you can know exactly what we're going to talk about, but it's going to be a great time for us to address questions as well. Thank you for your support. I'll see you next class. Goodbye, everyone.